is one that the committee really went all out to make sure that we could do this for the very first time. And we have three great speakers here who have a lot of input, and we're just starting the discussion. So you're going to hear from Chris, who's already started. You're going to hear from Shari from Rialto Markets as to why it's important. And you're going to also hear from my good friend, and I think he's in Texas right now. No, you're in South Dakota, right? South Dakota. No, he's in Texas. He's back in Texas. Okay, good. James Rowe from both Entoro, who is a FINRA broker dealer, but also Clear Rating, and I hope I got that correctly, which is a rating service. But he can describe that more perfectly, the name and all that. I don't want to take away from what the objective here. So we're going to talk about ratings and research, and again, I know the temptation is there to reach out to this other gentleman. By doing that, you become, what is that, crypto, you become off limits to them, and you'll soon find out why. And I'm gonna hand it off to Shari. I hope you're ready. It's great to see you again, all of you. Thank you so much, and let's have some fun this afternoon, okay?
Great, thank you so much, Oscar. So my name's Shari Noonan. I'm the CEO and co-founder of Rialto Markets, which is a FINRA registered broker-dealer and alternative trading system. I'm so excited to moderate this panel today. It's on ratings and research. And as Oscar mentioned, I'm joined by Jim and Chris, and we have a lot to cover today. So why don't I kick it over to Jim to do a brief introduction of himself and Entoro.
Thanks, Shari. Appreciate it. Actually, I'm in this section. I'm representing Clear Rating. Clear Rating is one of our affiliated entities under our holding company. It's not directly under the broker-dealer or the investment bank or the RIA, so it's a separate entity. So we do deal with Chinese wall issues from our side of the equation. But Clear Rating is an entity we started about 10 years ago with the concept to be able to value and rate private companies using a 3D dimensional model. And it has now expanded a little bit to bespoke valuations on companies, portfolio analysis, VC, PE shops, that type of thing, as well as ESG ratings. And we have a proprietary model on digital assets. So just a high level overview of that, but it is affiliated with our, through the whole financial organization as well. So I'll turn it over to Chris.
Sure. Thank you so much, guys, for having me here today. As mentioned, my name is Chris Lustrino, and I am the founder and CEO of KingsCrowd. In one line, we're really working to build kind of that first Bloomberg/Morningstar rating and analytics service for the online private markets. We're an independent, financial publisher that goes out and automatically rates all Reg CF, all Reg A plus deals. And we work solely on behalf of investors with the hope of providing them with context for this market, taking all of that disaggregation of the marketplaces that exist today, bringing it into one universe, and making it simple for investors to be able to conduct diligence, conduct analysis on the market, and find the investment opportunities they're interested in. And we believe really strongly that if we make the public markets look and feel, if we make the new online private markets look and feel like the public markets that we have today with the level of research and ratings that are out there for public companies, that will make this a much more accessible market and help educate and inform investors on what they need to know before they click invest.
Thank you so much, Chris. So I could not echo that greater, as Rialto Markets is an alternative trading system or a secondary trading platform for Regulation A companies. I was so excited to meet the two of you and really talk about ratings and research, because we really do feel it's a critical component to the price discovery, to really understanding the markets, to getting data about the different companies that are listed on the platform. So, perhaps Jim, back over to you. If you can walk through a broad overview of ratings and research and why it's important for issuers and for investors.
Well, for me, it should be for every issuer as well. Having a third-party review, be it a valuation or a rating, builds credibility, provides transparency into your operations. So much of the issuer's materials are self-serving, right? They're marketing materials. This is a third-party view of your operations, your value proposition, and it can give an investor an incredible amount of comfort and knowledge, and hopefully motivate them to invest in your operation. So to me, the first and foremost is credibility. There's other factors as well. You have just the whole concept of independence, which I think is critical. And then if you're an issuer, depending on which exemption you're using, if you're arguing a valuation, it's always better to have the facts in front of you. And I always like to say it's better to argue from the top of the mountain versus being at the bottom and having to argue up. And I will always maintain it's easier to discuss assumptions than it is to try to build a value. Probably one of the first three questions in any capital raise is, what is your valuation? It'll come out, if it's not the first question, it'll come out number 2 or 3. So it's important to have transparency, and it just builds credibility.
Excellent. And can you talk about some of the valuation drivers for a Regulation A transaction and how those differ from Reg D?
Well, for us in our models, the number one thing is always management teams. You can take it's that old adage, you can take a bad product and a good management team and make it work, but you can't take a bad management team and a good project to make it work. So that's heavily weighted in our metrics and the way we do things. So we're talking that could be a weighting of 40 to 60% on a particular project, depending on what it is. We also, it's pretty obvious revenue, where you are. Do you have an MVP? Or are you positive EBITDA? There's a lot of the actual financial metrics that go into it. Obviously, sector or particular product, those are critical. If you're in a hot market, maybe it's SaaS software, or something like that, or renewable projects, whatever it could be. The hot item that could end up being, and one that gets overlooked a lot is competitor analysis.
Mm-hmm. Excellent. You mentioned the management team and the importance of the management team. How do you quantify the track record of the management team?
That is more of an art than a science, and we actually have a 25 questionnaire for when we look at reviewing a management team. I don't really want to go through all of the metrics on it, but really it's has a management team work together? These are pretty common sense and obvious types of questions or answers. Have they worked together? Have they had an exit? Have they had a product launch? Have they had a buy and sell? Have they had an M&A transaction? Have they done something together to create value? It is an art, not a science, and we try to quantify it as much as possible. But particularly for younger management teams, it can be a little bit of a struggle.
Absolutely. And what variables do issuers always think are very, very important, but they're really not important in the valuation?
Well, every issuer thinks their baby is pretty, right? So once you can kind of get over that and really get down to brass tacks, I would probably say that what they normally do is overestimate the sales assumptions. So it usually would be something that they have false expectations of really how tough it is to build their sales pipeline. That would probably be an overarching statement.
Great. And I see a couple of questions over here. So what is the average cost for evaluation?
Well, for the whole market or for what we do? The whole market as a whole, it depends on if you're doing evaluation, depends on if you're doing a rating. It also depends on what you're asking for in a particular valuation or rating. We actually have we do things in threes. We have 3 different products. It's basically a snapshot, then a report, and then a study. It all depends on what it is for that. If you're looking at how other companies do it, Gris can pipe in here and talk about what he's doing. But ratings evaluations can be, well, it depends on, they may be free or they may generally somewhere between 10 and 20,000, 25,000 is kind of the average of most. And I'm grouping that into market knowledge, not only of ourselves, but some of the other competitors. I wouldn't compare what we're talking about to S&P, Moody, or Houlihan, Lokey, any of those types of groups, because they're not going to reach down to these types of valuations. They're going to fly at the publics. They're also going to fly at big structured finance type of products.
Great. Chris, do you want to comment?
Yeah, sure. So in terms of ratings, to be honest with you, the way that we work, like I said earlier on, it's all about working on behalf of investors, right? So in order to provide that best experience, we rate everything. As soon as a Form C, Form A1 is filed, that's automatically collected into our system, and it goes through a standardized methodology rating. And the key things that we're typically looking at are market opportunity, team experience, valuation, differentiators of the business, performance of that business. And as many of you may know or may not know, in your Form C, you're going to have your past 2 years financials, most recent, right? So if you're raising in 2020, typically it's 2019 and 2018. You're going to have your operating agreements. We're going to have bad actor checks on the key management teams. We're going to know who owns more than 25% of the company. So we have access to all of this data in these new online private markets. And what that does is it creates a way for us to be able to pull in standardized information and go and do our own market research and essentially create a standardized rating for every company that's raising on these various portals. So us, again, we don't work on behalf of the company. So in our instance, it's free. It's going to occur as soon as that Form C is filed.
Great. And one last question, first maybe Chris and then Jem. So what measures are in place to really protect against conflicts of interest? Having been in the public equity markets, I know that was a massive situation there. So what's in place in this market to protect against that? Chris, maybe?
Okay.
Yeah, if you don't mind,
Chris.
I would love to jump in here. One of the things I'm probably most proud of is that we're founded on this idea that we want zero conflicts. Like so many investors said, you can monetize this thing so many different ways. You can charge the issuer, you can charge the platform, maybe you have fees for when you drive investment. We want no part of any of that. Our whole thing is to be a standalone business that looks at every company in the exact same way. We don't care where you're from, what you do. And we've tried to actually take that next step, which is to make it all data-driven. So not to say, well, this market's exciting or this founder is exciting because they remind me of Mark Zuckerberg. It's to say, no, what experience does that founder have? Do they have relevant industry experience? Do they have founding experience? Do they have any exits to their name? Have they worked together with these people? How old are they? Those are actually quantified metrics, again, that are standardized for everybody, so we can look at every company in the exact same lens and put up every wall that we need so that it's totally independent, it's totally unbiased, and it's even taking out our own biases and just how we feel about companies when you meet with them and have those meetings and things of that nature.
Great, Jen?
Nothing to add.
Excellent, excellent. So perhaps, Jim, you can talk through a little bit about how often are these reports issued? And
well, it all depends. I think, I mean, a Reg A is going to be different than a D or what have you. We do valuations for, closed-end, funds, et cetera. Those are quarterly, right? So Chris's, his business is much more at the initiation. It depends as well. It depends on what model. Chris's business model is different than ours. So he will probably doing, conducting more updates than I would. So it all depends on the product. A Reg D, you may not need to do it once a year. If you're talking about Reg A, you're probably talking a quarterly type of, not a lot's going to move in a quarterly time period. And frankly, most of these entities are too small to justify the time or expense for it, frankly.
Great, thank you. Chris, maybe you could walk through a specific company. It would be really helpful to walk through a specific example of a company and the process for, for actually generating a rating and writing research.
Yeah, absolutely. So I know one company we threw out there yesterday, a fintech company that's on Seed Invest, doing a Regulation A+ offering. And the reason I'm mentioning is right now we rate every CF. We look at Reg A+ deals, we track them, but they're not necessarily rated. So it's a good way to talk about something that's like not in their product set, just talking about a company that we've looked at, we've seen, and then thinking about the dimensions we care about, how to discuss it, right? So again, getting back to the things that matter, it's looking at market opportunity. It's looking at founding team experience. It's looking at business model. It's looking at the valuation and the price of that firm. It's looking at the differentiators of that business and their performance. And so when I look at a business like Ground Floor that we've looked at before, You go on Seed Invest and you can find that company. You know, they are a company that's been raising capital progressively over time over the past few years. They've gone from kind of a Series A stage company through to a Series B, and they've made a lot of progress. And if you look at the management team, the people that they have on their team, you know, all have founded companies before, have had exits before. Brian Daly's done a ton of work in building companies and selling them off before. And so he's someone that's actually experienced, right? He's been there, he's done that, he's accomplished things. They have an incredible legal team that they've put in place. So they have all the parameters and things that you need, and they've built out this team of real estate experts because they are essentially a real estate investment platform that lets anyone invest as little as $10 into real estate deals. And so what I love about that is the fact that they've made a lot of progress, but they have the right team in place that's showing they can execute, because they've gone from, you know, maybe very small revenues into the millions and millions of dollars last year. So when we look at traction, they've built their user base, they've grown their revenues. So the business is doing really well. So when you look at the valuation that they have, it's based on their progress. And I think one of the things that's really helpful, if you're a founder, in terms of coming up with your valuation, a lot of it is, what is the market willing to bear, right? So if you're a fintech company, high growth fintech company, and you have X, Y, and Z parameters, go and try and find similar companies to you. Look on Crunchbase, talk to your friends. You could find information and hear things and figure out what does your valuation need to look like, right? And get in a ballpark that you think is fair and reasonable to what the market is bearing today. And don't be way beyond that. We all want to think we're way beyond, but frankly, that could end up setting you up for failure down the road. So if you look at Ground Floor, I think, you know, it's a little bit of a high valuation, but it's fair for the progress they've made. And when you look at other comparative fintechs, I think actually they're in a relatively decent place. It's probably the biggest knock on them is their valuation felt a little high, but overall.
Really quickly, because you talked a lot about the management team and the weight of the management team in that evaluation. Jim, going back to the importance of the management team that you stated yesterday when we were having our prep call for this, what are the third-party background checks or other services that, when you're evaluating a management team? Are you simply looking at their background? Are you digging deeper than that? Can you talk a little bit, Jim, about that?
Well, yes, for us, if it's something that's been conducted under a broker dealer, I mean, you're going to not necessarily rating, you're going to do OFAC, FinCEN. We do independent broker checks on the broker dealer side of the equation. You would usually replicate that same thing on a valuation. If you're doing a total standalone transaction, you'd absolutely want to know what the backgrounds of these individuals are. And surprisingly, Googling somebody you can find out a heck of a lot. I found out one time the hard way. Just sometimes look, and you'd be amazed to see that somebody has been thrown in jail for a couple times for SEC violations. So it does happen. So you do have to do just the basics at a bare minimum. And background checks can be quite expensive. So you just don't run those willy-nilly. I like to run. There's some relatively inexpensive resources in that category to do that. That can be a couple $100. But because the rating side of the equation and valuation services, you're not regulated, so you're not held to a fiduciary level. You're not held to certain. I mean, you're really protected by the First Amendment in the United States. It's an opinion, so we really don't have that exposure. Clearly, you don't want to have egg on your face from doing a valuation of a bad actor. So, but doing a valuation and a rating, you're not getting a bad actor form. You're not collecting that kind of due diligence on somebody. You're really looking at a particular project. So but a lot of it has to do with what Chris and I both kind of indicated is, what has been their tangible track record, exits and all the things we've already discussed.
And fortunately, Shari, a lot of the CF and A+, in order to occur, before you can even file that Form C or that Form A1, the management team has to have bad actor checks. One of my favorite, I'm not trying to promote anyone here, but CrowdCheck has been great. We've used them before. They're pretty cost affordable, and they get the job done. So that's one that I see in a lot of Form Cs is the only reason I'm mentioning.
Great. And so now let's talk a little bit about the investor end. So what do investors look for in a report? Chris, maybe you want to, oh, actually, yeah, Jim, why don't we start with you and then kick it over to Chris?
Well,
Sure.
to me, it's got to be something that's, I mean, the obvious, easy to read, gets to the point, articulates the value proposition. You know, I'm always a big fan of comp analysis. I'm a big fan of summary tables to get to the activity. I'm not a fan of the traditional Wall Street reports where you have something 40 pages and they've just repeated something 3 different times. That doesn't do anybody any good. So charts, graphs, tables, the more the better, as long as it's clean and easy to read. I think it's good. That's on a valuation side. Depending on what your ratings met, if you're doing something similar to an S&P or Moody's bond type of rating, that's one thing. But you need to make sure that your metrics and your methodologies are clear, so a first-time reader can understand quickly.
Great, Chris?
Yeah, I would say they're looking, 2 big things we hear is they're looking for validation or to see discrepancies. And so one of the things that I would kind of urge to issuers when you're thinking about listing your company, everyone wants to tell the best story in the world, and I totally get that. But I think it's really important that you be honest with yourself. It's okay to say that you're an inexperienced management team. I myself am an inexperienced management team. So I said, here are the people we want to hire. Be honest with your weaknesses, be honest with your strengths. Don't just say your market is, trillions and trillions of dollars. Talk about what's actually applicable to you. It's okay to not have a multi-trillion-dollar market sometimes. Everyone says it, but it's okay not to. What they don't want to see is they read everything is incredible on your offering page, and then they come to a rating report and they realize everything is completely sideways and different. If they come to the rating report, it's like, yep, that's basically what I read on the offering page. It's because they were honest with themselves and realistic with what is actually real. And that gives them comfort that, hey, I felt good about the company. It basically looks like someone else does too. But if that discrepancy is huge, they're going to go, wait a minute, something's wrong here. So I would say that that's the big thing as an issuer to think about, is just being honest with yourself.
Great, great. And Oscar said we should have fun. So I'm going to I put in another question here.
What? Fun? Who said you could have fun? Not with this topic. It's
so
so controversial. I mean,
I was going to say there's a controversial question over here from Dave asking basically, once a rating or valuation has been made, even if the company didn't request it, aren't they obligated to report that? And can that make a raise even more difficult? So, Chris, do you want to kick it off and then hand it over to Jim?
I'll provide some thoughts. Ultimately, there's a couple of things here. One, it's a public raise. And so, to a degree, public has a responsibility to know what's going on with the company. More importantly, I think it's all about how is the rating company approaching that effort, right? So from our perspective, what we try and do is be extremely respectful and thoughtful about how we rate these companies. We do not blast this to the universe. We keep it behind expensive paid walls that people have to pay for to access. So it's certain individuals that are utilizing it. And we present this as a market scan tool. And every company is looked at in the same way. And literally you go to each company, you can see how on each bar, how do they score on valuation? How do they score on market? So, if you get a 3 is actually quite good, because some of your elements are excellent and others are weaknesses. And really what people are utilizing this for is more to give them context and thinking about their investment opportunity. It's not necessarily going to be the total turnoff. They just want to understand what's going on with it before they make a decision. The reality is people are used to this in the public markets. So if you simply don't have it in the private markets, it's going to hinder the market in a bigger way than probably not, having the best rating in the world. So ultimately we have our position in the world. We stay independent, we stay respectful. We don't try and hurt anyone. We're super clear about our methodology. We're standardized for everybody. And, ultimately my rating early on was not that great. If I put all of our stuff in, it wasn't that great. But I went and sold my company anyway, because I'm me and I have to go and do that. And you as the founder have the most power to drive and influence and create investment volume. That's not really our role. We're simply providing another context and way to think about them.
Excellent. Jim?
Nothing to add. Chris did a great job there.
There we go.
I have something to add to that. So because I'm the compliance guy today. I'll be Mr. Compliance.
Are you going to take my spot, Oscar? Is that what you're trying to do?
I just kind of figured that you've been put on the spot long.
Okay, if you're going to talk compliance, I'm ready to go.
Well, actually, the question that Shari, it was a good question. What do you do? I mean, as a company, you're eager to take that report and you post it on, good or bad. You shouldn't. You should talk to your lawyer first. You have to understand that what Chris and what James are doing are independent research reports and are each for different type of environments. And listen, when you join the crowd, get ready. I mean, I wrote an article about 6 years ago now. It's 6 years old. And I said, get naked. Because that's what doing Reg A, Reg CF, you know, Reg D, follow 6Es. You got to get naked. You got to get ready to take all that, you know, who you are and put it out there. And you got to get ready for people like Chris and others who may emerge that are going to provide reports. And they're out there. That's just the facts of life. But the key is that if it's a positive report, you're eager to promote it. And that's where you're going to get yourself into some issues. Consult with your lawyer, number one. There's not the, you know, the report is there, but consult with your lawyer before you do anything with it, because again, the information that's there, it's independent. The minute you connect to it, it's no longer independent. So that's that was my only comment on that one.
Yeah, and actually I'll throw in one thing, Oscar, to the get naked and get ready. I have to tell you, if you're going to experience any challenges, boy, is it going to be from the crowd. The hardest questions I've ever gotten are from people on the Q&A sections on the offering pages, and you have to answer them. And the one thing that I would strongly suggest to you is when you get those Q&As that can be super off-putting and feel like they're just attacking you when they don't even know you, is to be respectful and very thoughtful in your response. Talk to your lawyers about your response and make sure that they come across in the right way, because I have seen offerings get totally demolished by a terrible Q&A section that just scares everyone off. And you can do that, but if you answer respectfully and thoughtfully, you can prevent putting yourself in that situation. But it is a very vulnerable position to be in, and it's not always easy, for sure.
It isn't.
That's great. So why don't we just finish up with 2 more questions. I see that the next panel is on. So Jim, what are 5 lessons that you've learned from conducting evaluation?
Well, as I mentioned earlier, everybody thinks their baby is pretty, so you have to temper that with activity. You suffer from in the private markets the lack of really good information. You don't have that like you do in the public markets, and so comps can be wildly different, and you have to just take a step back and say to yourself, does this make sense? And you got to make sure that people understand that, you know, this is an art, not a science. We try to drive it to a science, but at the end of the day, there's a ton of subjectivity into it. You know, the weightings of things can grotesquely alter an output. So for our own analysis, we do weightings, and then we have a whole risk section where then we go and we risk the entire valuation or the rating just to bring it into what would make common sense. Another lesson is the issuers most of the time don't know their competitors as well as they should. They have a difficult time, many of them, articulating single set kind of economics, meaning margin analysis or single unit economics. They fail at that quite a bit. Those are the high points.
Great. And Chris, why don't you just end us out before we turn this over to the next panel with a few things that issuers always fail at during a rating or evaluation review, just as parting words.
Wow, that's a loaded question. A few things that they always fail at. Honestly, I think, like I said earlier on, be honest with yourself. If there's 2 things that they continually inflate to the moon, that would be their market size opportunity and their revenue projections. And the reality is, as soon as you start working on whatever it is you're doing, all of those numbers are completely and utterly wrong. So just, think critically and thoughtfully about what it is that you put out there, because ultimately, you have to answer for that. And over time, as you continue to progress, it's still going to live there and people can see it. So, just think about that.
Great. Thank you so much, Oscar. I will turn it over to you, but thank you so much to Chris and Jim for a very insightful panel.
Hey, thanks for having us on. This is great.
Actually, I want to say thank you to the 3 of you, because it was gutsy. First of all, we haven't done it before. Nobody's done it. We're doing it online, which puts the dynamic even more different. But we're finally having this discussion. And as you may recall with David, it started the morning with, until we can get this to some secondary component, but it's price discovery, all of this. So we all need to understand that the pieces are coming together, and they're coming together with people who understand each other's work. I know Chris has been working with the lawyers to understand how to approach this in a fully compliant manner. I know James, being a FINRA broker-dealer, understands that all too well. So thank you so much for the three of you today. This is a great discussion, and it leads us perfectly into our next panel, the broker-dealers. So thank you.
Thanks, guys.
Thanks.